Last week, Goldfields announced that they're going to acquire Yamana. And on occasion of this acquisition, let's have a look at the fundamental value of both Goldfields and Yamana using the most recent reports, that is Q1 2022. And as there is no fundamental information available for a combined merged miner, we're going to look at the fundamental numbers separately. And the numbers that we'll look at is the gold and silver prices as well as copper prices, the amount of reserves and resources that the miners have in the ground, the amount of long-term debts they're holding as well. We do take into account the taxes, number of shares outstanding. We look at the time value of money, calculating the discounted value of those shares, and we throw in some information on insider shares as well. As you see, it's not an exhaustive list of fundamental factors, but it's a list you can start with, remembering that this is not an investment advice. And what we arrive at is discounted per share value after all-in sustaining costs, long-term debts, and taxes. And as usual in our valuation, we're going to look at three scenarios: balanced, conservative, and optimistic. Where in the balanced scenario, we're going to plug in the gold price of $1,900 and the appropriate silver and copper prices as well. In the conservative scenario, we're going to plug in the gold price of $1,600, and in the optimistic scenario, we're going to plug in the gold price of $2,200. Although perhaps with record high inflation, you might actually expect gold price to go far beyond 2,200, perhaps over the next couple of years. So even the optimistic scenario doesn't seem to be outlandishly optimistic. Starting at the reserves and resources in the ground, GFI has much more gold than Yamana has, but Yamana, on the other hand, has much more silver and copper than GFI. So all of that leaves you the gold reserves of under 47 million ounces for Goldfields and gold resources of just over 47 million ounces for Goldfields. Silver reserves are 39 million ounces and silver resources are just under 7 million ounces. Goldfields also has copper reserves at 474 million pounds and copper resources at 268 million pounds. Looking at Yamana, we have gold reserves of 13.5 million ounces and 14.5 million ounces of resources. Yamana has over 109 million ounces of silver reserves and nearly 51 million ounces of silver resources, as well as over 6.6 billion pounds of copper reserves and nearly 1.4 billion pounds of copper resources. So as you see from the numbers in the ground, both of these companies are of a very respectable size. And perhaps a merger of these respectable size companies is what the precious metals market needs right now to improve the relatively low sentiment that is prevalent at the moment. Looking at the costs, debts, and taxes, Goldfields has all-in sustaining costs of around $1,160 per ounce. Goldfields also has over $1.4 billion in long-term debts. And that is rather concerning to me at the moment. I still remember the story of formerly largest gold miner in the world, that's Goldcorp, which ended up taking too much debt, had a bit of a liquidity crunch, and ended up being acquired by Newmont. Regarding taxes, for simplicity, I assume a flat tax rate of 20% for all of the miners I look at to save some time. Yamana has all-in sustaining costs of $1,080 per ounce and a long-term debt of just over $773 million. Looking at shares and time value of money, Goldfields has over 891 million shares outstanding by the end of Q1 2022, and unfortunately 0% of that is reported to be in insider hands according to Yahoo Finance. I say unfortunately because a larger allocation of shares in insider hands helps with the motivation and alignment of incentives of the managers and shareholders and investors, and is generally a good sign as insiders would know what's actually happening with the company and if it's in a good or bad situation in general. For discounting, I'm going to use a discount rate of 5%, and that the forecast production for 2022, the reserve life for Goldfields is 21 years, so we're going to apply discounting to 21 years, And if we add only half of measured and indicated resources, the average reserve and resource life extends to 31 years. Looking at Yamana, they have just over 961 million shares by the end of Q1. The numbers on shares are of course going to change as a result of this merger, and 0.36% of the shares for Yamana are held in insider hands. The reserve life for Yamana is 15 years, and adding half of measured and indicated resources extends that to 23 years. Next, let's have a look at some highlights that don't actually get included in the fundamental valuation model, but include some additional factors that you might want to have a look at. For example, both companies have a relatively comfortable cash balance of over $500 million, although, as I mentioned, Gold Fields does have a relatively large long-term debt of over $1.4 billion. Both companies have relatively good exploration potential with multiple projects at various stages of exploration. And beyond gold, silver, and copper reserves included in the valuation, the companies also have some zinc and molybdenum reserves, bumping up that valuation by just a little bit. And of course, the main highlight is the announcement last week that Gold Fields is going to acquire Yamana in an all-share trade. So if you are holding Yamana shares, you're going to receive 0.6 of Gold Fields shares for each of your Yamana share. As a holder of Yamana, that actually gives you a nice premium of nearly 34%. If memory serves well from the announcement, the Gold Fields shares will continue to trade as they are, whereas your Yamana shares on the brokerage account are going to be replaced with the Gold Fields shares, similar to the procedure between Newmont and Goldcorp that's a couple of years ago. And by the end of the merger, around 61% of the merged miner will be owned by the current Gold Fields shareholders, and around 39% of the new merged miner will be owned by current Yamana shareholders. Finally, arriving at our fundamental valuation, which, remember, looks at discounted per share value after costs, long-term debts, and taxes. In this valuation, in the conservative scenario, we plug in the gold price of only $1,600, and we look at only proven and probable reserves in the ground, as if the miners didn't have any of the resources beyond the proven and probable reserves. That gives you a conservative valuation for Gold Fields of $10.90, which is actually above the current market price right now, with the market price just below $10. That implies that the market sentiment in precious metals is extremely low right now, and a lot of companies might actually be quite undervalued. For Yamana, the discounted per share value after costs, debts, and taxes is around $8.13, which is again above the market price of just under $6. The balance scenario plugs in the gold price of $1,900, and we still only look at the proven and probable reserves in the ground without taking into account any of the resources. And that gives you a balanced fundamental valuation of $18.86 for Gold Fields and $13.08 for Yamana. And lastly, the optimistic valuation plugs in the gold price of $2,200, and in this valuation, we do take into account full proven and probable reserves and only half of measured and indicated resources, never mind any of the inferred resources. So even in the optimistic scenario, we don't include all of the reserves that the miners hold. Hence, even our optimistic scenario is leaning that much towards a conservative side. Even then, the optimistic valuation for Gold Fields is over $33, and optimistic valuation for Yamana is over $20. Now, let me leave you with this question. If we do see gold price above $2,200 next year, and this optimistic scenario actually plays out, would you expect a combined Gold Fields Yamana merged miner to have a share price of both of these numbers combined, 33 plus 20, that's significantly over $50? So again, GFI over $50 in the middle of next year? Let me know down in the comments below. Have a nice day. Bye-bye. And an Easter egg for those who are still here, the combined valuation wouldn't actually simply add up these two numbers. You would actually expect some sort of a weighted average of these two valuation numbers, somewhere close to perhaps $25, $26, $27. For more on a range of assets, including precious metals, the general stock market, cryptocurrencies, as well as a range of commodities, join us at myfinancesteacher.org. With the first month only charged at $5, which is basically nothing. Have a pleasant weekend. Bye bye.